Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk interview series. I'm delighted today to be joined by Spencer Welch, who is Global Head, Oil Markets, Midstream and Downstream Consulting at S&P Global Commodity Insights. Spencer, thanks so much for joining us, and we're going to be chatting about your expectations for the upcoming MPGC forum in Bahrain that's taking place at the end of May.
My pleasure. Nice to speak to you.
Oh, great to have you. Well, lots going on in the markets, obviously, and to keep track of. I mean, we had a Sarah Week, of course, not so long ago. And of course, that happened at the height of the whole trade tariff launch, if you like, from the US. And we've seen so many dynamics there as well change in the last few weeks. But what are your expectations for what MPGC will sort of focus on? We have the agenda, obviously, that's set. But what do you think people are going to be really talking about?
Well, as you say, S&P Global, we hosted our annual Zero Week conference 2 months ago, more than 10,000 delegates, and an extremely successful conference at a very interesting time in the world, and particularly in the United States, with that conference being in the United States. So a lot of talk about maybe a slowing of the energy transition, a more of a focus on security. On domestic supply for not just for the United States, but for all countries. So slightly more inward looking, slightly slower energy transition, and more focus potentially on going back to conventional, a little bit swinging back slightly to conventional oil and gas. And I expect those themes to continue at MPGC, but a lot, as you also mentioned, a lot has happened in the meantime. So we've had the announcement of tariffs by the United States, and then a little bit of backtracking on those, which has caused turmoil in the markets, and then more recently OPEC Plus. Deciding to continue with supply increases and again putting downward pressure on oil price. So I'm sure those themes will be front and center of what is talked about at MPGC.
Absolutely. As you said, the oil price was dropping before, I'd say OPEC Plus reiterated its intentions. I mean, it was sort of nervousness on the macro sort of global economic picture, and that's still the case. Prices have stabilized a bit. You could argue the last week or so got a bit of a bump, really with the market saying that it can absorb those volumes at the moment. But really, it's about the second half of the year, isn't it? And you mentioned, investment sentiment switching a bit away from transition, more towards conventionals. That certainly has been the theme, hasn't it, the last year or so? At least, do you think the oil price now being in a new $60-ish range, as opposed to 70 plus just a few months ago, is that going to impact energy transition versus conventional investment appetite?
I totally agree that we are maybe in a new region for oil prices. We've had maybe 3 years of very, very stable market, locked in between 70 and 80. Extremely effective job done by OPEC Plus to control the prices by managing supply. Maybe we've stepped away from that now, where there's a bit of a frustration about the oversupplied market and about the restrictions on some of the OPEC Plus members. So maybe we are in a new region. I think, as we saw back in 2014, where this is maybe a little bit of a repeat of that market where OPEC Plus decided to let more of a free market dynamics take place by increasing supply and putting pressure on the producers who are more where the supply is more driven by economics than by politics and policy. So yes, I think there will be more pressure on producers, particularly the United States, particularly the smaller producers who are the fastest to respond to prices. And S&P Global, we have already slightly reduced our supply outlook from the United States because of the lower outlook in price.
That's right. Yeah, and quite a few commentators are saying that the US production will be at best flat this year, if not possibly decline. Of course, if prices go below $60 for a significant period of time, some The other day, somebody said they could see as much as a $400,000 barrel a day drop from the U.S. production. But let's see where things go. Of course, another area that's impacted by the flat price is refining, isn't it? And the whole downstream sector. What do you think? How is that? I mean, that's again your specialty within S&P Global Commodity Insights. The refining outlook for the next quarter or two, and again, how they might be planning subject to what happens with the price.
So, yes, absolutely. It's a challenging time for global refining. I think they're more impacted by the tariffs than necessarily the absolute price in oil, because for refining it's a margin business, so it's the difference between crude and products. So the tariffs are not good for the consumer. So generally the consumer will end up paying more for products, and that has a downward pressure on price, and therefore an upward pressure on price, a downward pressure on demand, and so refinery margins are being squeezed by that. We have lowered slightly our demand forecast. It's the global outlook for refining is very much region by region. In Europe and North America, where the energy transition has already been progressing for a number of years, we're seeing refinery closures. There's been a recent announcement of a closure in California. There are a number of refineries that have announced that they will be closing in 2025. So oil demand is falling in those regions, while in other regions we have refineries that are expanding and being commissioned. In particular, a mega refinery, Dangote, on the west coast of Africa, is in the process of being commissioned, and that, as that goes through its commissioning phase, you can visibly see the impact it's having on the regional oil prices and oil markets.
Absolutely. And I mean, again, another area, of course, is also the Middle East. You have some big refining projects here in Asia, of course, China being one of those. And there is this shift, of course, also to petchems. Everyone's saying, what's going to happen to Chinese demand? Well, the petchem demand is going to replace some of the lost gasoline demand, for example, in terms of how oil prices might be impacting. So let's talk a bit about Asia in terms of the outlook for that in the context of, a slightly weakening Chinese economic picture. And what does that mean necessarily for refining in China and for its export markets in Asia as well?
I agree with you. I mean, so the Chinese economies has maybe been the biggest headline, or the biggest thing that is being tracked by all participants, and it's been under pressure for more than a year. So it's not really a new story. Chinese oil demand has been the driving force of the oil markets for 20 years. Not quite half of the world's oil demand growth over that period has been China, but it's definitely around 30 to 40%. So it has been the biggest story. In 2024, Chinese oil demand barely grew. And so that is, that's caused some of the oversupply and some of the weakness in the oil market that we still have at the moment. We don't expect a significant change in 2025. And this has been it's a strategic shift. So China realized maybe 10 years ago that it was very reliant on oil imports, and so made a strategic decision that it wanted to electrify, it wanted to accelerate the transition of its vehicle fleet, so that now sales of electric vehicles in China are more than 50% of the total sales. They are significantly ahead of any other country in the world.
Absolutely. That EV sales and uptake. And what about the EV uptake in Europe, Spencer? Would you say that is going to see an acceleration or deceleration? There's been some pushback in recent years following a very sort of positive start.
There has, I think. I don't think it's not going to suddenly jump up in terms of sales. I don't think it's going to backtrack. It's going to slowly increase. I think it's inevitable that sales of electric vehicles will increase, but a number of European countries have delayed their policy in terms of the phasing out of combustion engines. They've sort of moved the deadlines back as to when sales of pure combustion engine vehicles will be banned. They're still saying, yes, we can get to net zero by 2050, but obviously, that will be a harder thing to do if you've got more combustion engines still being sold and not as fast an increase in electric vehicles.
And Spencer, I mean, just looking again at MPGC coming up, what would you say would be the sort of top three things to watch out for, the most critical discussion points that you would expect we should be talking about? I mean, you mentioned trade. Obviously, the oil price is going to be, as always, part of discussions. But will we see low carbon energy sources as part of that taking people's attention, or are we going to be focusing on geopolitics, for example, Iranian oil coming back into the market? I mean, where would you say the top three sort of things to watch for will be?
I think a bit of all of the above that you mentioned. So at MPGC we have the first day is a single stream where we're talking about geopolitics and talking about global oil. And then on the second day, we split into two streams. We have a downstream refining chemicals stream, which I have the privilege of chairing. And then in parallel with that, we have a low carbon energy stream. I think picking up, first of all, on the low carbon energies, we've got a whole day set aside to that. But I think more of the talk will be about gas as a rather than the pure renewables. We do have to talk about pure renewables, but a lot more focus on gas. That was also a key theme coming out of CERAWeek. You mentioned geopolitics. Absolutely, I think that's one of the key things. That's all around us. I would say there's more uncertainty at the moment in terms of what is going to happen with the Russia-Ukraine war, what is happening with tariffs, with the battle between the US and China. For dominance in the market. So geopolitics is critical, and we've got a session, I think it's maybe the second session of the day on the first day of the conference, talking about geopolitics. And then absolute oil prices. So OPEC Plus's strategy, what's going to happen to oil prices? Are we now in a new market where instead of control of price, we are in a market of battling for market share?
Thanks very much, Mr. Well, 10 days is a long time in politics and in oil. And so at the start of MPGC on the 26th of May, we'll see where the conversation is at. You mentioned Russia, Ukraine, of course, that gas and the gas equation there. And many people saying that is, once that's resolved, we will be seeing, for example, Russian gas being taken up more than it has been again by Europe. A lot of question marks out there, aren't there? But best of luck, Spencer, with the conference. And thanks for joining us today on Halftime Talk.
Thank you very much. My pleasure.